Good morning, story trading VIPs. A bear market rally remains elusive. Yesterday I had that talk about Snap putting the nail in the coffin. At least temporarily, it did. First, it was Target that put the nail that stopped that bear market rally, and now it's Snap that stopped that bear market rally. So, are we going to get one? Are we not? I don't know. I think if we get one, it's purely because of technical support buyers coming in combined with short covering in an oversold condition. Macroeconomic at all. And I'm not playing the long side with high conviction at all. So we were up again. Look at this chop. Overnight, futures were up about almost 1% at their peak. And then at around 4 a.m., it came crashing down because of a report from Apple, or it wasn't, it was about Apple. The Nikkei reported development of at least one of Apple's new iPhones has fallen behind schedule due to COVID lockdowns in China. That turned futures back around, and we're back in this chop. So I really don't know where this is going to go. Macroeconomically, I think we go lower. Uh, Technically, this is what I'm looking at for a possible bear market squeeze. The RSI is down here at 28, really, really oversold levels. And again, we're close enough to that 200-week moving average that you could see support, you could see a bounce, but there's no catalyst come in. There's no narrative being formed. There's no opportunity for the market to get excited about something. I am hearing growing chatter that because the economy is decelerating so quickly with all of these macroeconomic warnings coming out, we had Snapchat, of course, but then Dix this morning citing macroeconomic concerns, down 12% because of their guidance. Actually, they reduced same store sales guidance from a best case situation of break even. Let me see if I can find the number, but it was a sharp decrease from like -4 to 0%, or -2 to 0. And they changed it to like -8, possibly as low as -8 on same store sales. Oh, here it is. Dick's Sporting Goods cuts full year 22 same store sales outlook to -8 to -2 from -4 to flat. Right. So potentially you're going from flat to -8. So the macroeconomic situation, I think, is deteriorating very, very quickly. Possibly one of the sharpest, fastest recessions we're diving into in any time I can remember in my life. So I'm hearing a possible narrative forming that, hey, the Fed isn't going to be able to be uh, as hawkish, right? So maybe that's a narrative that can form to get this to get some sort of bear market rally. But you can see this morning the news from the Apple supply chain issues because of COVID has derailed at least an early morning hope for a rally. So we'll just have to see what happens. This is a very, very difficult environment to trade. Uh, I don't know. I don't know what to, who knows, right? Don't have any advice for you in terms of trades. Let's go through this. Now, there is also another narrative forming that, hey, the lower quality retailers that benefited from all that free COVID money, they're the ones that are suffering now. But the higher quality ones like Nordstrom, yeah, hey, look, they had good earnings. They beat and raised. I don't buy that narrative either. I think pretty quickly, Nordstrom, they just beat and raise. I wouldn't be surprised if within 2 or 3 months they warn, okay? Because I think you're going to see a reverse wealth effect impacting even the higher end consumers. And I think you're going to see that warning come out of Apple too. That's just my opinion on it. Could be wrong. Pretty bearish. It's all a matter of, is it priced in? And is the Fed going to become more dovish sooner rather than later, because macroeconomically we're deteriorating so quickly? And that's a fair argument, and that's the push and pull, and that's the bears and the bulls fighting it out every day. And that's why we see all this chop at very, very, very critical level. And I showed you that other chart the other day of how important this 200-week moving average is, which is why they're putting up a fight in this range, 265 to 285. This is very meaningful. If the bears win and we break down below that, it could be a sign that they're right, that this is a serious recession and macroeconomic issue that's going to last quarters with a lot more downside. So that's why we have this big battle forming right above that key 200-week moving average. That being said, let me throw out a few specific sectors and stocks that potentially are outperforming and potentially have trades in them. First of all, I've been looking at this stock, RIBT, starting to do some research. Man, I usually don't like these stocks that are pushed by the very, very large social media accounts on Twitter. I usually just ignore them. I follow them, but 99% of the time, I just ignore, right? This time, I don't know, RIBT was mentioned many times. I'm like, let me take a look because I knew it was the ag sector. And I'm very bullish on the ag sector. So I took a look at their earnings report, which just came out, and it was a beat, in a guidance. So you can see Q1 sales 10.56 billion. So this is like a grain alternative or rice, something to do with the ag sector, some excitement, some good sentiment about because wheat prices are high, they're going to do really well. So I'm starting to research this. I have a very small position. I haven't seen anything yet that like bounces out at me like this is awesome. This is macroeconomically they're doing great. Haven't seen that yet, and I'm trying to do some collaboration with some of these influencers on social media to find out what they're thinking. So that's a possible trade in the ag sector. I want to point out Zim. I did get this the other week. I think I mentioned in one of the shows. They had great earnings. Here you can see they broke the 50 DMA. Just too cheap. Even in a bear market, they're just printing so much money. What's the PE? Like 1.45. Wow. So I do have a small position in that because obviously the PE is low for a reason. People are worried about the cyclicality of this, probably worried about recession, which is why you're not seeing a 5 or 10 PE on this one. But 1.5, all right, I don't know. So this is one of those bullish charts, 50 DMA. It looks like it wants to have a 20-50 cross. So that's something for you guys to look into. Other thing I want to point out, air. What you guys know, I nailed this from 250 to 25. I sold a little bit at 16 on the way up, and I got back in very small amount, somewhere like in the 10 range or something like that. So I don't have a big position at all. It's a tiny position for me, and I have not been tempted yet. Now I'm starting to get interested. Okay. I don't know that I'm going to step in here because I do have a bias that the market's going to crack. We were at critical $7 support it's testing from the other week. 3 times it tested it. Back there again yesterday. Take a look at this long-term chart, and I think there's a magnet here and a potential for this to get to around 5. You can see the 200-week moving average at 456. Now, I don't take these things verbatim. I'd like to triangulate with other support levels. So you have a psychological support at 5. So I usually just round up, say, okay, let's take that 450, 460, round it up to 5. But then coincidentally, look at this incredible support at $5 on the chart here from last summer. Wow, major, major, major support. So this is one, even in the depths of a bear market. Imagine if we get a huge dump. Where's my chart again? Air, where are you? Imagine if Apple does warn and it takes the markets down and NASDAQ goes down 20%, whatever it is. Air goes to 5. I'm all over it. I'm not going to be scared. I'm going to buy this. I'd call it a triple support. 200-week moving average, 5 psychological support, and 5 that technical support from these levels last summer. Okay. We know the financial situation is a ton better than it was at 5, but I would caution if you really want to compare apples to apples, you got to look at an enterprise value chart, which I can't pull up here easily. I shared it on Y Charts Enterprise Value with our community. So, by the way, if you're a member of the VIP community, any chart you want to see from Y Charts, I can share it with you from the paid account I have there. So, that's the story with Air. On watch, I moved it up in my watch list, and I may start nibbling on that. Okay. I just want to point out, since this was a VIP presentation by someone in our community, Colton Tao, it's a psychedelic ketamine stock. They did have news this morning. Pharmatherapy to develop and commercialize novel. The title is a little misleading. It says commercialize. So I got excited at first. I'm like, oh, this is a revenue deal. This is commercialization this stage, but to develop and commercialize. Little misleading. You read this and you see that, hey, they're going to do some phase 1 trials and conjunction with this other entity, and there was nothing in here about financial arrangement, whether they're getting paid or not by CCBIO to do this. I don't know the arrangement at all. So I thought it. I don't know. I don't think necessarily this is consequential, but we got to hear from Colton Tal in our community, the expert on PHRRF, and see what he thinks. So, you know what? A sector that honestly I probably dropped the ball on all year is oil. We talked about it as part of the new FANGs, right? As a long-term hold, fuels, agriculture, aerospace, nuclear, gold, and minerals. So we talked about it, but I haven't been on top of it as far as trades, and it does nothing but keep going up. Both USO, UNG at 52-week highs this morning. Look at that, and you see the way to play it, or the energy basically at a 52-week high this morning. XLE. So this has been a hot sector. You could play the upside. I've probably personally avoided it because I just have a bias against. I just think it's too cyclical, commodity space, and too geopolitically sensitive. And I'd rather invest in companies that produce things rather than commodities. But so maybe I dropped the ball on this, and this is a sector that keeps doing well. On the other hand, though, uranium, I'm very bullish on. I'm playing that energy boom tangentially through uranium. We've had a ton of great presentations on various different uranium stocks in our community, and I totally buy the long-term thesis. And as natural gas goes up, especially in Europe, you're going to see more and more chatter about nuclear energy, which will help uranium, and eventually the supply and demand situation will help up there. CCJ is the one I follow here to monitor, but obviously there's a ton of other ones, including DNN, GladF, PALF, a whole bunch of them. So there are a few bright spots here, but for our favorite stocks, which are the risk assets and the micro caps and the biotechs, that's where we're still trying to find a bottom. That's where we're getting killed in the market because Qs take ARK down, ARK takes all those risk assets down. And we haven't really been able to find the bottom in those stocks yet, whether it's AIR or SMSI or VTSI. Although VTSI, I wouldn't necessarily call a risk asset so much. It's just have individual company issues, and it dropped below 5. It's still below 5 there. Still holding it. It's just too illiquid for me to have reduced my position. It's here at the 200-week moving average. RSI is getting into a zone here, but we're waiting for the 10Q, so in the audit to finish. So hopefully that'll happen soon. Aside from that, I do want to point out, man, DRIO was a champ yesterday. Unbelievable strength. Like, try to find another risk asset that had a day like this yesterday. Ended up closing down a little bit, but it was very strong throughout the whole day. The average price is probably, green throughout yesterday. It bounced a couple times off the 50 DMA. Yesterday had a high that was higher than the previous day's high. So could this keep running? Yeah, it could. But honestly, you got to wait. It's the catalyst. It's all about, do they get this national health insurance plan on? If that keeps dragging and that doesn't happen, eventually over time, it's going to drop again. If it does happen, boom, and probably 10, 11 is your immediate target there if we get that national insurance plan. Maybe a little bit of resistance in the 8s, but right to that 200 DMA test, I think, is what you'll see if and when they announce that insurer. So that's all I got for you. Not great news. Yeah, listen, if you've been playing that energy rotation, you're making money. Good for you. Congratulations. If you're in the risk assets looking for a bottom, it's still elusive, and we'll have to see what happens. Just a last second check on the news here to see if there's anything we missed since 9 a.m. I don't see anything. So let's continue collaborating in the community. Thank you, everyone.